In this video, we will discuss a 1-minute scalping strategy that can generate a 628% profit in just 100 trade. This 1-minute scalping strategy will only utilize 2 indicators that are available for free on the TradingView platform. Hello everyone, and welcome to my YouTube channel. Before you proceed with this video, don't forget to like and subscribe to this channel. In this example, I will conduct backtesting for this scalping strategy using a 1-minute time frame. However, you can also apply this trading strategy on a 5-minute or even a 15-minute time frame. Additionally, this trading strategy can be used for scalping in the Forex, crypto, and gold markets. To implement this 1-minute scalping strategy, let's go to the TradingView platform. Open your TradingView and navigate to the indicator search bar. In the indicator search bar, type RSI or Heikin Ashi RSI Oscillator, then, select Heikin Ashi RSI Oscillator from J. Rogers. Next, let's make a few adjustments to the Heikin Ashi RSI Oscillator indicator. In the Input tab, change the open smoothing value to 8. Then, go to the Style tab. In the Style tab, uncheck the boxes for RSI histogram, RSI shadow, and RSI overlay. After that, set the opacity for the background fill in the overbought and oversold regions to 50. Once you've made these adjustments, click OK. The Heikin Ashi RSI Oscillator indicator is similar to the conventional RSI indicator, but with some distinctions. Normally, when using the RSI indicator, you observe signal line patterns. However, with the Heikin Ashi RSI Oscillator, signals are presented in the form of Heikin Ashi candlesticks. To use the Heikin Ashi RSI Oscillator, you can take advantage of the oversold and overbought areas. When the price reaches the overbought region, your focus will be on identifying the optimal sell entry point. Conversely, if the price reaches the oversold area, your attention will be directed towards finding the best buy entry point. However, as usual, this indicator is not meant to be used in isolation. It's recommended to use another indicator that serves as a trend guide in the market. Let's go back to the indicator search bar and type EMA or Exponential Moving Average. Now, let's make some adjustments to the EMA or Exponential Moving Average indicator. In the Input tab, change the EMA length to 350. Then, go to the Style tab. In the Style tab, customize the color of the EMA line according to your preference. After making these changes, click OK. If the price candlesticks are situated above or break out above the Exponential Moving Average or EMA line, it indicates a bullish trend. On the other hand, if the price candlesticks are below or break out below the Exponential Moving Average, it signifies a bearish trend. If the candlestick is above the Exponential Moving Average or EMA 350, focus on entering a buy position. Wait until the Heikin Ashi RSI Oscillator candlestick enters the oversold area. Once the Heikin Ashi RSI Oscillator candlestick has exited the oversold area and changed color from red to green, ensure that the price candlestick is bullish. If all conditions are met, you can execute a buy entry after the closing of the price candlestick. Place a stop loss at the most recent swing low. Target your take profit using a risk and reward ratio of 1 to 1.5. To initiate a sell order, if the candlestick is below the Exponential Moving Average or EMA 350, focus on entering a sell position. Wait until the Heikin Ashi RSI Oscillator candlestick enters the overbought area. Once the Heikin Ashi RSI Oscillator candlestick has exited the overbought area and changed color from green to red, ensure that the price candlestick is bearish. If all conditions are met, you can execute a sell entry after the closing of the price candlestick. Place a stop loss at the most recent swing high. Target your take profit using a risk and reward ratio of 1 to 1.5. Now, let's proceed with backtesting for a total of 100 trades using this 1-minute scalping strategy. But before we dive into that, let's review the conditions of this backtest. We implemented a lot sizing table with a compounding system to maintain your psychology and money management. This table automatically adjusts the lot size you use based on your total equity and the total number of pips for your stop loss. All you need to do is fill in the figures for your stop loss, take profit, and total balance. The table will then automatically adjust the lot size you can use. You can download this table from the link provided in the description column. After conducting 100 trades with the scalping strategy on a 1-minute time frame, here are the results we obtained. 1. This backtest was conducted using a 1-minute time frame and employed a risk and reward ratio of 1 to 1.5. 2. Throughout the 100 trades, this 1-minute scalping trading strategy achieved a total of 65 wins and 35 losses. Consequently, the scalping approach demonstrated a win rate of 65% during the backtesting period. 3. This is an estimated amount of profit in pips achieved during the backtest. Additionally, there is an estimate of the profit or loss amount in USD. Furthermore, this is an approximation of the account growth during the backtesting period. 4. The scalping strategy achieved a consecutive winning streak 6 times and a consecutive losing streak 3 times. 5. If irregular lot sizes are used, these are the expected results you might obtain. We always recommend using regular lot sizes to maintain your money management. This practice proves beneficial in preserving your psychological well-being throughout your trading journey. That concludes our discussion for now, and we'll see you in the next video.